Gold exchange and precious metals. Members are Marianne Alfornon, Carla Angela Aquino, Angelica Escobar, Miriam Tambago, Michelle Floron, and Gerald Flores.
Gold exchange and precious metal. To formally start the introduction, the gold and silver have been recognized as valuable metals and were highly coveted by Asian civilizations. The precious metals still have their place in a savvy investor's portfolio in modern times. But which precious metal is the best for the investment purposes? And more importantly, why are they so volatile? Precious metals are one way to diversify an investor's portfolio and can act as a hedge against inflation. Although the gold is the most common investment in the precious metal sector, it is not the only one out there for investors. The silver, platinum, and the palladium are all the commodities that can be added to your precious metals portfolio, and each has its own unique risk and also the opportunities. There are a number of factors that make this investment so volatile, including the supply, the demand, and also the geopolitical issues. In addition to owning physical metal, investors can gain access through the derivatives markets, the metal ETFs, and also the mutual funds, as well as the mining company stocks.
Talking about real bullion, right? And not ETFs.
Excuse me?
Real gold. We're talking
Yes, real gold. We have gold in London and we have gold here. And that is about more than 10% of the gross international reserves.
And what is the goal, Governor, to keep buying? Because I understand in 2009, the central bank's domestic gold purchases totaled 10,000 ounces, a big drop from 900,000 back in 2010. So what is the target this year?
That is because of a change in the law structure whereby the purchases from small miners in the Philippines was subject to all sorts of taxes, including value-added tax. And so a recent law was passed which in effect remove all those taxes so that we can now buy directly from small miners in the Philippines. And so they took away all the taxes, and so that it became very attractive now, and it's working. And so we will buy domestically, but at the same time we have, I think, excess gold bars in relation to our gross international reserves that we may trade as the need arises.
So we only buy from domestic small-scale miners, Gov. We don't buy from like countries that are major gold producers, for example, the U.S., Canada, or the UK.
No, we don't buy internationally. We sell internationally because we have more than the gold that we need at the present time.
And Gov, if you look at history, you know, there are two notable spikes in gold, 1980 and 2011, breaching $2,000 per ounce at each time. Gold is definitely grinding higher today. I mean, Fitch sees a sustained $1,850 per ounce of gold. The Bank of America is looking at $3,000. What is the BSP's expectation?
Well, as you know, when I took over at BSP, the price of gold was around $1,400 US dollars per ounce. Now it's hitting around 1,900 or 2,000. And I said, why are we not trading? And they said that was the policy. They call it passive policy. And so I said, why don't we actively trade now? Considering that our estimate is that our gold holdings at the moment is more than the optimal. If you look at the World Bank study, if you look at the World Council study, it's more than 10%. And so I think we are going to be opportunistic. As you know, we have a huge international reserves. Our recent estimate is 98.6 billion US dollars. I think by the end of the year, it could reach up to 100 billion US dollars, the highest ever in our history.
But Gov, one of the interesting things about gold is, you know, what supply is coming out of mines going to be. There's COVID, mine output, I imagine, is declining for gold, which could put additional pressure on the price. Is this accurate based on, your dealings with Filipino miners?
The Filipino miners are what we call they are price. They do not influence the price. They just look at what's in the global market, what's the price in the global market, and they do monitor the global price. And so whatever that price is,
We follow.
we make adjustments because we have to refine the gold, and so we just buy from them. And because before the new law was passed, I think it goes to parallel market. Maybe it goes to Hong Kong, and via Hong Kong goes to China. So we want to help our small miners, and so that we are encouraged by this development. The price of gold is going up because of the uncertainty, because maybe decreasing confidence in the U.S. dollar, and so that's why there's a movement in the price of gold.
What is gold? Gold is unique for its durability, malleability, and ability to conduct both heat and electricity. It has some industrial applications in dentistry and electronics, but we know it principally as a base for jewelry and as a form of currency. People most likely first discovered gold in streams and rivers all over the world, with its beauty and luster catching the eye. The known history of gold goes back a long way, so far back that, according to the National Mining Association, it was first used by cultures in modern-day Eastern Europe in 4000 BC to make decorative objects. Gold was generally used for a couple thousand years solely to create things such as jewelry and idols for worship. This was until around 1500 BC, when the ancient empire of Egypt, which benefited greatly from its gold-bearing region Nubia, made gold the first official medium of exchange for international trade.
Here are the several factors account for an increased desire to hoard the shiny yellow metal. First is systemic financial concerns. When banks and money are perceived as unstable and or political stability is questionable, gold has often been sought out as a safe store of value. Next one is inflation. When real rates of return in the equity, bond, or real estate markets are negative, people regularly flock to gold as an asset that will maintain its value. Last one is war or political crisis. Conflict and political upheaval have always sent people into a gold hoarding mode. An entire lifetime's worth of savings can be made portable and stored until it needs to be traded for foodstuffs, shelter, or safe passage to a less dangerous destination.
Gold exchange. Gold exchange standard monetary system under which a nation currency may be converted into bills of exchange drawn on a country whose currency is convertible into a gold at a stable rate of exchange. A nation on the gold exchange standard is those able to keep its currency at parity with gold without having to maintain as large a gold reserve as are required under the gold standard. The gold exchange standard came into prominence after World War I because of an inadequate supply of gold for reserve purposes. British sterling and the US dollar have been the most widely recognized reserve currencies. The requirement of a fixed rate of exchange for the reserve currency has the effect of limiting the freedom of the reserve currency countries' monetary policy to solve domestic economic problems. The use of gold reserves is now limited almost exclusively to the settlement of international transaction or on rare occasion.
Under on the Philippine Stock Exchange, a company's information, the Atok Big Wedge Company Incorporation, formerly known as Atok Big Wedge Mining Company Incorporation, was incorporated and registered with the Securities and Exchange Commission on September 4, 1931. Since its incorporation, the company engaged in mining as its primary purpose, producing the gold as its major product and silver as a byproduct. So the company's production was all sold to the Central Bank of the Philippines at a price subsidized by the Philippine government and later on at the prevailing world market price. Although AB changed its primary purpose in 1996 from mining to general investment, the company reverted to its original purpose of engaging in exploration and development of mining, oil, gas, and other natural resources, which the SEC approved on May 24, 2010. The company has two wholly owned subsidiaries, namely AB Stock Transfers Corporation, with the purpose of establishing, operating, and acting as a transfer agent or registrar of corporations, and also the Tidemark Holdings Limited, a Hong Kong-based company that holds 20% of gas and oil exploration and production company Forum Energy.
Gold became the queen of precious metals. First, gold has been a mythical and coveted precious metal for thousands of years, which has prevailed over the history of money. Second, gold is considered a hedge against currency crisis and inflation. Third, gold is a reputed store of value and the optimal choice for portfolio diversification. Fourth, up until the 1970s, the value of gold had been tied to the value of the US dollar. And last, central banks are among the biggest net buyers of gold for their foreign currency reserves.
You will learn everything you need to know to start investing in gold and other precious metals. Gold is beautiful. Brides love to wear gold jewelry. Gold is perfect for us as a crisis currency that has often been considered a hedge against inflation and can be bought and sold on one of the few truly liquid markets. But why is gold so attractive for the investors?
The gold supply is naturally limited. As it is a natural resource that is extracted from the ground through mining, the supply of gold is naturally limited. Large parts of global gold deposits are already depleted and little high-quality gold is left. As gold is also sometimes mined under questionable circumstances, the recycling of gold is also increasing in terms of significance. Gold deposits are non-renewable. Gold is retrieved from used computers and mobile devices, while measures to protect humans and the environment from the effects of mining are also increasing. Gold is considered a scarce resource because it is in short supply with high demand. Overall, the price of gold is bound to increase.
Central banks drive the gold price. On a global scale, central banks are among the biggest net buyers of gold for the foreign currency reserves. Foreign currency reserves are the funds held by central banks on the asset side of their balance sheet in foreign currencies. Foreign currency reserves are made up of precious metals, special growing rights, and other assets as backup of funds. Governments hold these reserves in case the nation's own national currency is completely devalued.
Gold is an industrial metal. However, gold is not only a popular store of value for governments and investors. It is also a popular industrial metal. Gold is particularly heavy, versatile, does not age, has a high density, is resistant to acid, is a great conductor of electricity, does not corrode, reject infrared radiation, and thanks to its high ductility, is one of the metals that can be best formed. As gold does not generate interest or yield dividends, investors measure the return on their investment or the earnings based on opportunity cost.
Portfolio diversification. Finally, gold has always been considered a reliable addition to investment portfolios. As mentioned, it is considered a store of value and a hedge against inflation. On the other hand, investing in gold is easy even for investors who are just beginning. In any case, diversifying your portfolio with gold and cryptocurrencies has great potential to reduce investment risk and to increase returns.
What are precious metals? Precious metals are elements that are considered rare and chemically inert. They're not abundant in nature and therefore they have high economic value. Precious metals are used commonly in jewelry, industrial processes, or very often as investment vehicles.
How many precious metals are there? There are 8 metals that are considered precious. They are the gold, silver, platinum, palladium, rhodium, ruthenium, iridium, and osmium. The precious metals that are not gold or silver, platinum is the most traded. To define it, first is the gold. It is no money and provides portfolios with that hard, tangible, safe, and uncorrelated asset protection in times of economic depression. Gold is also provides investor with a stable store of wealth in times where currencies are no longer perceived to have a value.
Silver, having both investment and multifaceted industrial applications, often experiences an amplifier effect when held in different ratios alongside gold. Platinum. Despite being nearly identical in appearance, platinum is more valuable than gold. Platinum's high price point can be attributed to its rarity and density, as precious metals are often prized by their weight. In addition, platinum is highly coveted as it is considered a status symbol in the fine jewelry industry, resulting in an increase in overall value.
Palladium is a shiny silvery metal used in many types of manufacturing processes, particularly for electronics and industrial products. It can also be used in dentistry, medicine, chemical applications, jewelry, and groundwater treatment. As a commodity, it has drawn the attention of investors because it is not easily substituted for other metals. For example, the element is an important component of catalytic converters. Next one is rhodium. It's a lot more expensive than gold, but its price depends largely on the demand of the automotive industry, as it is the main buyer of rhodium. It is considered a very rare and expensive metal whose price changes according to supply and demand. The price of rhodium is a rare precious metal that's in limited supply. So if demand increases over time, this could increase the precious metal's price, making rhodium a suitable investment generating asset.
Ruthenium is a precious metal not widely known to non-scientists. It is a target of much research. However, it is used in computer hard drives, the tips of fountain pen, and the catalyst to purify car exhaust, among other uses. This book presents information and research on the properties and application of ruthenium, including potential uses in phytochemical function and anti-cancer activity. In the form of investment, ruthenium is not traded as same as gold or silver. However, in the market, it has a valuable price. Although ruthenium isn't as abundant as other precious metal like gold or silver, it is holds excellent monetary value. Iridium. Iridium is transition metal in the platinum family, which naturally occurs in alloy with platinum and osmium. It is the most corrosion-resistant element and competes with osmium for the title of most dense element, while rhodium, iridium, osmium, and ruthenium could be great investment as well. They are not typically recommended for individual investor because of their extremely limited supply and high prices.
Next is osmium. Osmium is used to produce extremely exclusive jewelry and as an investment metal for long-term capital investment. Osmium is characterized by its unique blue, silver, and blue-white luster, which becomes particularly prominent when it is illuminated by sunlight. So it is the rarest and heaviest precious metal in the world. In recent years, the osmium market has proven to be high-yielding and crisis-proof because osmium is a limited resources, so many experts see great opportunities in osmium as it is an investment with high return potential. So depending on the application, there are common allowing elements that can be mixed with the main precious metals to improve the properties of the final product. There are other elements of interest that are also used in non-precious metal jewelry or accessories. So when buying or selling precious metals, one should be familiar with three main terms describing the precious metals. So it includes the carat, fineness, and troy ounce. Carat means it is a grading system to determine the purity of gold. So fineness refers to the proportion of the pure precious metal in the alloy. And last one is the troy ounce. Troy ounce is the measure to determine the weight of the precious metals. So it is common to find 5 different types of gold on the market.
Are precious metals a good investment for you? Precious metals offer unique inflationary protection. They have intrinsic value, carry no credit risk, and cannot be inflated. That means you can fit more of them. They also offer genuine upheaval insurance against financial or political military upheavals. From an investment theory standpoint, precious metals also provide a low or negative correlation to other asset classes like stocks and bonds. This means even a small percentage of precious metals in a portfolio will reduce both volatility and risk.
Precious metal risk. Every investment comes with its own set of risks. Although they may come with a certain degree of security, there is always some risk that come with investing in precious metal. Price for metals can drop due to technical imbalance, more seller than buyers, changes in supply and demand, geopolitical issue, and other related factors. That said, during times of economic uncertainty, seller benefit as prices tend to shoot up. What are the benefits of investing in precious metal over stocks? Investing in precious metals comes with some benefits. Over-investing in stocks, such as being a hedge against inflation, having intrinsic value, no credit risk, a high level of liquidity, bringing diversify to a portfolio and ease of purchasing.
What are the best ways to invest in precious metals? The best way to invest in precious metals is either to buy the metal outright and hold the physical form, or to purchase ETFs that have significant exposure to precious metals or companies involved in the precious metals business. So as mentioned first, you can invest in precious metal by buying physical precious metals. Investors can buy physical precious metals in the form of coins, bar, or rounds. So physical precious metals can be stored at home or in a safe deposit box at a bank. Holding physical precious metals may provide a sense of security as investors have full control over their investment, but it also carries risks such as the potential for theft or damage. And the other ways to invest is that by purchasing ETFs. Exchange-traded funds are investment vehicles that trade on stock exchanges and track the price of underlying assets, such as precious metals or companies involved in the precious metal industry. The ETFs can provide investors with exposure to the price of the underlying metal without the need to physically store and secure it. Additionally, some ETFs may provide more diversified exposure to the precious metals industry as they track multiple companies involved in mining, refining, or selling precious metals. So it is important to note that investing in precious metals, like any investment, carries risk, and investors should conduct thorough research and consult with a financial advisor before making any investment decisions. What is a disadvantage of investing in precious metals? Well, the precious metals have no cash flow, so an individual will receive no income. So as mentioned, precious metals like gold, silver, and platinum don't generate any income like stocks or bonds do. So if you invest in them, you won't receive any regular payments. Additionally, if an individual holds the outright metal, there is also a storage cost associated with the investment. So if you physically own the metal, you will have to pay for a safe and secure place to store it, which adds to the cost of the investment.
How and where precious metals are traded. Precious metals have always been used as means of exchange between traders and as a store of wealth, with gold being the metal most commonly used for this purpose. Today, there are many ways to invest and trade in the gold and other precious metals.
Buying coins. In addition to bars, investors looking for a direct investment in physical gold and silver can also buy coins. Many countries mint coins from gold and silver, and there are many private markets and agencies that support this form of investment.
Indirect investment. Another popular way to invest in precious metal is through a mutual fund or an exchange-traded fund. This is an indirect form of investment where investors place their assets into a fund and in turn the fund invests in metal. The fund charges a management fee to cover its costs. With an exchange-traded fund, which equity in the fund is traded on a stock exchange.